Good morning and welcome to this new edition of Bourdier's Monday Report. Last week, we saw the publication of Purchasing Managers' confidence figures for both the United States and the Eurozone. Confidence has stabilized in the services sector and is increasing in the manufacturing sector. As the graph shows, confidence in the Eurozone's manufacturing sector has been on an upward trend for several months. The current level is above the 50 threshold, indicating expansionary territory. This bodes well for a recovery in sector activity in the coming months, pending the impact of the German fiscal stimulus plan, which will only become apparent from the next year onwards. Fed Chairman Jay Powell's speech on Friday at the Jackson Hole Central Bankers Symposium was more accommodating than expected. He revived investors' appetite, enabling U.S. equities to avoid posting negative performance for the week. U.S. indices rose by 0.4%, while in Europe and Switzerland the increase was more pronounced at around 1.5%. Emerging market stock exchanges, which were largely closed at the time of the Powell's announcement, fell by 0.4%. 10-year sovereign yields benefited from these statements and fell by a few basis points, pushing bond prices up by 0.6% in both US dollar and euro. The dollar depreciated by 0.1%, allowing gold to rebound by 1%. This week in the United States, we will see the release of house prices, consumer confidence and PCE inflation figures for July. Nvidia's Q2 results will also be important, not only for the stock or the sector, but for the market as a whole. In the Eurozone, we will see the release of the European Commission's confidence indices for the economy, industry and services. Alphabet, i.e. Google, reported very satisfactory Q2 results. Management was particularly reassuring about the rise of AI applications, which greatly satisfied investors. We are positive on the stock, but prefer to wait for a possible dip in prices to strengthen our positions. That's all for today. Thank you for your attention and see you next week.